almost as if there's now scope once again for the inflation print to surprise to the upside, given that we've seen this pullback. What does sub 1.5% yields on the 10-year mean for equities, Josh?
I'm not terribly sure that that absolute level, 1.5, is terribly meaningful. I think equities are probably more sensitive to the rate of change than the absolute level, so long as we're under 2%, of course. Above 2%, I think there would be big meaning for equities. But I think what's interesting, and to piggyback some of what Michael was saying, there's not a lot happening at the margin in the overall averages, but you have some very interesting trades starting to work out that really have nothing to do with rates. And biotech is a great example of that. Take a look at XBI. This is the equal weight biotech ETF. This is a clear breakout. I think, obviously, we would have to point to the approval for Biogen's new drug, not just approval, but almost like coronation of their Alzheimer's drug. That probably sparked this, but the second-day follow-through, I think, is interesting. GameStop ripping up 9% today, back to all-time highs ahead of the print. Nobody cares what the earnings print is, quite frankly, but that's an interesting thing happening. But then I look at Amazon. Amazon's not a rate play. It's really uninvolved with, any kind of economic or inflation activity. That's not really what drives that stock. Continues to act a little bit better every day. It's been in a 9-month consolidation, now working its way back up to the upper end. If you ask me what could spark the next major move higher in the market, how about a monster breakout for Amazon? It's a very big, very important stock and could absolutely serve as leadership in the second half. You contrast that with Netflix, which is doing the opposite, trading down $100 from its January high, and it tells you there's something Amazon-specific keeping that stock doing what it's doing. Last thing, if we're really going to have inflation and growth that's too fast, tell me why the transports are selling off to the extent that they are. The IYT is now broken below recent support, trading at the lowest level since April. FedEx and UPS are getting it good today, and that would not be happening if the acceleration of economic data that everyone's worrying about was really something that was at hand. So I think there are some mixed signals here, but on balance, pretty quiet with some interesting trades happening.
Shepard Smith here. Thanks for watching CNBC on YouTube.